Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partner broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, welcome back everybody to another live stream. Hope you're doing well and happy Wednesday to you. Hope you're doing well. And again, to the regulars, you know we're here every day. And if you're new, consider subscribing, hitting the thumbs up. We're here Monday through Friday. We do live streams most of the time for big news events and things like that. So, going to be jumping into some charts here. I've noticed that gold is coming down here a little bit this morning. Bitcoin's down this morning. Go figure. The dollar is still strong. Euro is lower. Pound is lower. The Kiwi dollar is lower. Dollar CAD's up. Dollar strength is not messing around here recently, guys. I'm not sure if you've been keeping an eye on yields too. Look at yields popping higher. And thought process here. Lots of things to talk about. Also, somebody says it's a funky shirt. It is. I've got my rotation of sweaters this week. I've worn a sweater every day to work this week. Do I have? I think I have one more in the closet before I got to do some laundry. Yesterday I had a solid green one. This one I've got the green and pattern type one, which is fun. I wore a white one on Monday, a blue one on Tuesday. Or no, I think I have a blue one left over. But it's fall time, and fall is the best. Yeah, I heard McDonald stock. Look at McDonald stock. Yeah, I heard that there's a little bit of a situation with McDonald's right now. They had some kind of, well, I saw it in our trading chat this morning. CDC said McDonald's has stopped using fresh slivered onions and quarter-pound beef patties in certain states. There's been some sort of outbreak. 10 hospitalizations. Internal memo McDonald's shared on its website Tuesday evening. Supply chain officer of North America said the company is taking swift and decisive action. Yeah, so basically it seems like somebody got sick, or some people got sick going to McDonald's. And stock is down 6.75% here this morning. And to be honest, McDonald's is a company that I would not mind owning in my portfolio. So when it drops like this, even though, of course, you know, you hope that everybody's okay who got sick. Unfortunately, somebody did pass away, I think. These sorts of events, just from strictly a calculated, evil financial markets trader perspective, sometimes are good opportunities to buy the dip. That being said, stocks themselves are overall quite high right now. Things have been going really well for the stock market this year. We've got the Fed cutting rates. You've got company earnings still doing pretty good. You've got inflation coming down. Lots of things kind of lining up. The stars are aligning, it seems like, for the stock market, which always makes me a little bit nervous, right? When everybody is sort of convinced that it's going to be a bullish 2025, it does make me a bit cautious. That being said, cautious does not mean I start shorting the market, right? A lot of traders will make the mistake that they have been doing on gold as well this year, which is they see something going straight up and they say, I don't trust it. I'm getting bearish. But getting bearish because something has gone up is one of the most dangerous trading pitfalls that I've seen from my perspective as a content creator in the space. I hear from a lot of traders, and yeah, it's quite the common mistake is, oh my gosh, this thing has gone up too much. I've got to short it, right? But the market is harder than that, right? Market is more difficult than that. When something is trending up, you have to ask yourself a bigger question. It's not as easy as saying, oh, market goes up right now, so I sell because it's going to go down now. It's not that easy, right? You have to ask yourselves, why should it go down? If you think something is bearish, why should it be bearish? If you're looking at gold, I've got nothing for you. I've got no reason right now to give you a strong conviction. I couldn't give you a pitch as to why I'm going to get bearish on gold. There's nothing for me to do, right? Interest rates are expected to continue coming down globally. That's good for gold, right? It means more currency getting printed, more currency, more costly gold. Uncertainty in the Middle East and Eastern Europe and the Asia Pacific, right? There's a lot of geopolitical stuff that could happen. So trying to short gold's rally here is a trap that I think so many retail traders find themselves in. Don't let it be you. Again, it doesn't mean that it is certainly going to go up from here. It just means that shorting because price has gone up is a terrible, terrible reason to do so, right? If anything, if you're a pure price action trader, this would also tell you not to short, right? Because you're in an uptrend. But this year has been a absolutely killer year for trend followers. If you've been fighting trends this year, this has not been a good year for you. If you're somebody who, oh, it looks high, I'm going to short right here, it's been a rough year. And I say that not to mock people. And it doesn't mean that, I'm on the right side of every single move. I'm not saying that. I'm just pointing out that, when something is trending well, just be careful. It doesn't mean you're immune from losses. Here's the Russell position that I took recently, which is not looking so hot. I may get stopped out on this position, but I'm going to take a controlled loss if this thing keeps going lower. And then I may get a second chance. I may get to try at a better price, but I'm still going to go with the direction of the trend. US 30 here, NAS down a little bit here this morning, SPX down a little bit this morning. So indices have been really sideways the last few days. Take a look at the SP500 here, and you can see that we're pretty much same spot we've been in for the last 1, 2, 3, 4, 5, 6, 7, 8 or 9 candles. We have not really moved. I do think that we have the potential to move tomorrow. Tomorrow, you've got some PMI numbers and unemployment claims, which, of course, have the potential to move the markets a bit. But the path of least resistance for me is still up until something changes in the story, right? Pullbacks are buying opportunities for me. If we come down here, I'd be very glad because then I could pick up some positions on charts that I really want to get long. Right? NAS, I'm looking at long potential setups. Dow Jones, if we get a pullback to the 38.2, I love that possible setup. Continuations to the uptrend. Gold, I don't have a current reading on the Edge Finder. So specifically, I'm looking for pullbacks in charts that have strong enough signals on the Edge Finder for me to take a trade. So if I was to filter here just for bullish and bearish readings currently, these are basically my items to watch. I'm watching the S&P. I'm watching the Nikkei, the Dow, the DAX, the NASDAQ, Bitcoin, Russell, and the FTSE. Lots of index trades and Bitcoin. So those are the things that I'm watching currently for bullish only setups. I'm not looking to short them. I'm not looking to fight that strength this year. And that has served me pretty well this year. Pretty spot on with staying with the trends. That's been the winning strategy this year and last year for that matter. So I'm bullish across the indices. Specifically, I really like the NASDAQ, the S&P, Dow Jones, and Bitcoin. And I do like the Russell, but Russell may not be liking me today because I think I might have gotten it a little bit early on that one. Euro USD, I'm still bearish on this one, but this one's been really frustrating. If you're somebody watching the Euro with me, I've wanted to get in a sell trade for like a few weeks now without any real opportunities to do so, right? Price has not really pulled back very well for me to take an entry. I was watching this area, I had a setup all lined up, didn't quite get the entry, which it happens, but it is frustrating when it does because it's like I had the right idea, but I didn't have the right entry. But this double top turned into a complete sell-off in the euro. So if you're in the euro USD shorts, then congrats. That is awesome. I think path of least resistance for this one is still to the downside. The dollar looks really strong, and there's a number of reasons why. Look at this, by the way. Look at that. The dollar index is breaking that level that we marked. 104, getting taken out. The bulls are not messing around on the dollar right now. That is, watch how this candle closes today, guys, because that is incredibly bullish looking. I mean, the dollar has taken no breaks. No breaks. There's one red candle in here. And again, this is why I'm going back to that concept that I've been talking about a lot today and last few weeks. Fighting trends this year has been one of the most painful years I can remember. Trend following for the 2023 and 2024 has been the winning strat by far. It's not always the winning strategy. Sometimes trend following is painful and has horrible losing streaks, and mean reversion is much better. But this year, trend following has been killing it. So when we look at the dollar index and it's trending up like this, pullbacks, continuations, that is the only thing that makes sense to me right now. The dollar index is also up because we've had some killer economic data from the US. We can go look at that, right? Just as a reminder, NFP smashed expectations, right? So we had big jobs data come in much better than expected. Unemployment rate actually went back down a little bit, which is also very strong. Unemployment claims are not super threatening. Job openings in the US seem to be moderating, which is also strong for the dollar. Wage growth picked up a little bit. A stronger consumer is a stronger economy. And then retail sales came in better than expected. So you've got all these indicators for the US dollar that make a real good case for why the dollar looks strong. You know what else makes the dollar look strong right now is that both of our candidates running for president have big plans to spend a lot of money. Spending a lot of money, regardless of your opinion on each one, they both have big plans to spend money, and big plans to spend money leads to possible inflation risk, which leads to the Fed not cutting rates as much. If that is our new story, we're not going to see as many rate cuts. The dollar is going to fly. So if that's what we see happening, that's why the dollar is trending so well to the upside. And that's not a trend I want to fight, right? That is absolutely not a trend that I want to fight. This looks very, very strong to the upside. And we drew this fib yesterday. Look at this. 61.8% retracement failed to hold. So did the 50s. So did the 38.2. This is evidence of a very strong reversal, in my opinion. You combine that with the economic data and the Edge Finder score. Man, I'm so bummed out that I missed this idea on the Edge Finder. It was perfect. The Euro USD shorts were like the currency trade of the month that I missed. Dollar strength has been the play. It's been what I've been watching for the last few weeks, and just unfortunately missed that Euro USD short. That would have been the right trade for me in hindsight, 2020. So just showing you that, no matter how much experience you have with this stuff, you're still going to miss trades sometimes. You're still going to be off on your entries. This is why trading is difficult, right? At the end of the day, the reason trading is difficult is not because, the reason trading is difficult is mostly because finding an edge is difficult, and so is sticking to a strategy, right? When your strategy is not working or you're missing entries, it could be tempting to say, well, next time I'm just going to sell the break because there was no pullback and I missed this awesome move. Well, this is one example. Most of the time in my trading experience, you get the big break and you do get a retest, and that gives you the opportunity to get into the trade, especially if you have good confirmation from the fundamental side. Those are my best trades. However, sometimes just going to happen that variance is not in your favor and that the market continues on without you. It's just going to happen no matter what. There is no fixing, what traders will do. Here's a common mistake that many of you guys, myself included, probably have experienced. You see this move happen and you say to yourself, next time I am simply going to short right after a big close underneath support. And I'm not going to wait for retest because I missed this move and that would have been game changer. That is a very easy mistake to make. You just changed your strategy simply because of one example of when it did not work. Don't do that, because a lot of times, most of the time, you get these big moves and some form of a reversal, some sort of a pullback retests that area, and it gives you a chance to enter the right moves. I am not going to change what I've done for years simply because I missed this one move, right? That would be foolish. But many traders do that. That is how most traders lose money, as they change strategies every week. Don't be a rotating door trading strategy person, right? Stick to something, back test it, accept its flaws, right? There is no strategy that is going to make your trading immaculate, perfect all the time. In fact, one of the secrets of great trading is that great traders take losses all the time too. They just don't change what they're doing week to week, right? They stick to something. They back test it thoroughly. So just something to think about. Another trade that I'm looking at is a possible long position on Bitcoin. Bitcoin is pulling back to a level that I really like off of the daily chart. I shared this in our free Telegram channel, by the way, this idea that I'm looking at. If you would like to get access to that free Telegram, we're going to drop a link here in the chat to join that for free. We share analysis. I share, my own things that I'm looking at. Frank also is in there sharing his ideas. So if you have not already joined our free Telegram channel, make sure to do that. The other thing is, if you're a stock trader, we'll drop a second link here. If you are somebody who also watches stocks like myself, I'm trading things like NVIDIA. I trade things like Apple and all sorts of different, companies and individual stocks. If you are a stock trader or an options trader or an ETF trader like myself, join us in the free stock Telegram. We just launched this recently. We'll drop one more link here in the chat if you guys don't mind on the producer side. This link will take you to our stock market Telegram channel. If you are watching this live stream later on, if you're watching the rollback recording of it, you can find it in the description down below. But yeah, come join us. Stocks Telegram's got some really cool stuff coming to it. And we do share both analysis and stocks, as well as, of course, FX futures, all that good stuff. Gold is down here 0.6% here this morning, a little bit of a pullback. And again, this is partially why I'm a big fan of not chasing things too. I am still, if I had to take a position on gold, it would be long, but I would not take this trade here. I'd be looking for at least a pullback to this 2675 level. And that's crazy to think. We're talking about pullbacks to 2675. That's how bullish this year has been for gold. So pullbacks into this area look interesting. Although I don't have a signal currently from the Edge Finder, I'll keep an eye on it. If gold pops into the watch list here, I'll probably take a trade if I can find one. But currently, no setups on the top setups scanner, which is looking at, of course, economic data, technical reads, and sentiment. If you're someone trying to get into fundamentals, by the way, I've referenced this tool quite a few times today on the live stream. I would encourage you, if you have not already, take a 30-day trial of our tool. If that is something that you're interested in getting more information about, we'll drop another link here. I know we're dropping links like crazy in the chat right now, but these are all great value tools for you guys. So we'll drop one more link here in the chat to sign up or apply for a 30-day trial of the Edge Finder. You can use the tools that I'm using every day. If you're somebody trying to get into fundamental analysis, trying to understand economic readings, labor statistics, inflation readings, I know it can sound scary at first, but the right tool can make it very easy to understand. So try it out. There's the link in the chat. Apply for an Edge Finder trial, 30 days. What is the difference between unemployment rate versus unemployment claims? Great question. So if we go to unemployment rate, this is the percentage of people trying to get work who filed for unemployment, right? It happens once a month. We get it at the same time that we get the jobs data, NFP. So unemployment rate is like a finalized percentage that comes out. Unemployment claims are a weekly reported thing that just show you the number of people filing for unemployment that week. And this comes out, like I said, every Thursday, we get a new reading here. So we get way more frequent updates on this than we do with the unemployment rate. And this is an actual number, a number of people filing for unemployment. So like the latest one last week's was 241,000 people claimed unemployment. And that number changes week to week. Watching this can be very useful. If we see this number going up, that would indicate not so good for the dollar, because of course, more people filing for unemployment is a bearish thing for an economy, and less people filing for unemployment is a bullish or positive thing for an economy. We can actually do something here. We can take a look at a little longer history. Let's do 180 days back. We can see how this number has changed, hopefully. Maybe not. Not sure why it's not working. End date, 7 days in the future, 180 days. Okay, maybe not. Maybe we did have that data. This drop down might not be working. Usually you can take a look at the longer term numbers. That being said, right now we at least go back to July. You can see the claims. When they rise, again, that is considered bearish for the dollar. When they fall, it is considered bullish for the dollar. One of the big things with the Edge Finder is tracking a lot of US data. I know a lot of traders. Oh, look at this. We got something in here, guys. This is new. These red dots are forecasts. Oh, this is lovely. We had planned to add this, and I'm glad that I'm seeing this now. The devs are doing a great job. The red dot shows you the forecasted CPI, and the blue column is what actually came out. So we can actually see that last time around, CPI's forecast was to come down to 2.3, and CPI actually came in at 2.4. Very cool. That's awesome that they got that added. I just noticed that. How's Nick picking comments that he wants to answer? I'm not very good at reading the comments, to be completely honest with you. But there's also a lot of questions that I just don't want to answer, because they're going to take me down a long rabbit hole that I don't want to do, because I've got a lot of stuff that I try and knock out in these live streams. You got to look at indices, currencies, gold, commodities. If I answer questions, then we'll never get to charts. So I try to do a combination of both. If I see a good question that's like an easy one to answer relatively quickly, I do it, but it is sort of up to discretion. I apologize. I'm not always the best with the comment section or the chat. I do like Bitcoin. This is probably the top current setup that I'm watching. I may get an entry here today. We'll see if Bitcoin can come down to that 38.2% retracement, and I do take a trade. I will share that inside of the Discord. If you're not in the Discord, we'll drop the free link here in the chat if you want to apply for it. We got chat rooms and all sorts of good stuff here available to our members. Every trade that I'm taking gets shared. This is not available for free. This is a paid service, but if you're interested in that, you can also speak directly to a member of our team on our website. Go to a1trading.com. There's a live chat in the bottom right. But if you'd like to join the free version, you can apply for it right here. It's in the chat. The Russell trade is not looking good. I took an IWM position on the long side. It is looking rough. I'm down $461 on this trade at this moment. And we'll see. If I get stopped out of that today, then it is what it is. I am long the Russell. I have another small cap ETF that I'm in, which is IWF. So I'm in IWM and IWF. IWF is doing quite well. It's Russell 1000 Growth ETF. This is another trade that I shared a couple weeks back, and it's been doing pretty well. Growth companies inherently do better in a hospitable environment, meaning low inflation, low interest rates, or lower inflation, under control inflation, interest rates in a good spot, the economy doing well. And that's kind of where I think we're headed. I mean, the story right now, to me, looks intact. Now, that could change. If you get a big spike in inflation, if you get corporate earnings start to really sour, if the consumer starts to really hurt. These are stories that we look out for, but we don't know if that's going to happen. Right now, it seems like most things are pointing towards a stable economy. So I want to stay long equities, and I want to long things that have potential to do quite well in that environment, like growth stocks, Bitcoin, things that could do well in a rebounding, continuous, a progressing economy, if you will. And people will debate, the economy's not as good, etc. Bank of Canada just did a double rate cut. Thanks, Ivan. That's actually huge. I got to hop off. I'm about to do a podcast, so we're going to leave this next section to Forex James. I am running late already to my podcast, so let me go ahead and cut to our quick break to thank our sponsors, and then I'm going to jump over to that. Canada had a double rate cut, which is big news. Maybe James can just pull that up on Forex Factory just to see what that's all about. But real quick, guys, we're going to take a quick break. Thank the sponsors of today's show, and then we will be right back with Forex James. Stay tuned.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Weeble. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Weeble is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello. Just sort the camera out. There we go. How's everyone doing? I hope you're all having a great week. We're halfway through, almost the weekend for anyone that doesn't like the markets being open. I'm not sure why you're in this stream if you don't. So yeah, Bank of Canada just cut their rates, which is nice for my dollar CAD position here. So let's have a look here on trading economics. The benchmark interest rate in Canada was last recorded at 3.75%. Interest rate in Canada averaged 5.77% from 1990 until 2024, reaching an all-time high at 16% in February 1991 and a record low of 0.25. That's not too relevant. So it came out pretty much as consensus. So we could see, let's see what date are we on? It's October 10th. It's 23. I'm on the wrong calendar here, that's why. Sorry, give me a second, a bit unprepared there. So here we go. So 4.25, forecast was 3.75, came out at 3.75. So yeah, to be honest, kind of expected. I don't think anyone was not expecting a rate cut by Bank of Canada. So pretty straightforward stuff. So yeah, very good for my dollar CAD position. I'm also in oil longs here. So oil long is a little bit of a tricky one because I've been on the fence due to oil. The overall fundamentals are actually relatively bearish. The oil increase in the US increased, which obviously does hurt oil prices. However, we're still playing on sort of the Middle East tensions and some fears around the oil supply. So took a long position off, the standard setup that we go over every time I'm here, which is this 50% retracement level, which we had. Also respecting previous structure here, previous resistance, break, retest, now using as support. So far, looking quite good. So again, a very straightforward trade. Next up, I'm back in the pound dollar. So you can see here I had a position placed on Friday and I closed this one yesterday for 2% and I re-entered again this morning. So this one's currently just under 1% with our stop loss at break even. So this one was called in our Discord. But, having said that, it's not all sunshine and rainbows. I did also take a long on silver and you can see I got absolutely demolished on this one today. Don't think I could have picked a worse time to buy silver actually, but there you go. You can't always get it right. So looking to go short on copper as well at some point this week. Rate cut for CAD is also bullish for gold. Yes. Why do you trade WTI instead of Brent? There's no real reason. I just go to WTI. When I was learning to trade, the mentor that I had always used WTI, never Brent. So it's just what I sort of default to. I've got Brent here, but the price action is very similar, so there's not really any difference to me. unless there's very specific news. But yeah, generally speaking, I'll always go to WTI. So currently, I'm waiting to go short on euro dollar, and now might be the time after this current candle close. So again, took a position yesterday for 1%. So I'm looking to get back in short. The problem is that we've had, and I explained this again yesterday, that even the edge finder, as Nick was saying, was reading bearish on euro dollar, and it has been for a while down here. But the problem is the market moved very quickly, and it didn't allow any time for sellers into this market. Really, you kind of had to get in either very aggressively or sit on the sidelines. So in the past, since the 27th of September, since this downturn started, we've had 2 bullish candles, and that's it. And these bullish candles had very little volume. So it's very, very difficult to get in from a swing aspect. So I've been going more for these day trades here. So yeah, it's a case of just trying to get in these small moves over and over again and ride the downtrend, sort of getting in and out rather than holding a longer term position. So I'm waiting now for this 15-minute candle to close, and then I'll look to go short somewhere around here with a stop loss above the previous high, and a take profit down at S3, so a 1 to 2.5 ideally. So we might get that one on stream. Do you like Edgefall tool for options trading? Is it relevant? Edgefall is one of those journaling things, isn't it? I'm not too sure. I don't use those. So if there's any questions, let me know. But yeah, I think the markets today have been very volatile, actually, especially the commodities. So if we have a look, gold is down quite aggressively this morning or today. Yeah, gold's down, silver's down, copper's down as well, natural gas is up. But yeah, difficult to get into buys today. Coming out for US news in 8 minutes, are we? Have I missed something? This is why I don't like Forex Factory. It doesn't always show what I need. Let me find a different calendar here. Let's use this one. Give me a second. Oh, it's home sales. Yeah. Okay, that's fine. No problem there. We'll see what that comes out as. Canada's cut rates. Yes, it was expected. Pound Swiss. Yeah, I mean, I've covered Pound Swiss over and over, and I say the same thing over and over, that it's just such an ugly market. It's same as dollar CAD, really. Although dollar CAD is a little bit better, it's just an ugly ranging market. It's like, unless something drastic happens that causes inflows into safe haven, obviously the Swiss, then we can get a trade, or if something goes terribly wrong within the pound, then we can get a sell. But generally speaking, there's not anything really to drive me towards this market at the moment. We're still stuck within this range. The moving averages are flat. There's nothing going on. There's not really any structure to trade from. Economics, again, there's nothing really tilting me to this trade, or to this market, I should say. So yeah, nothing really. I think slowly we could possibly correct this move that we've had to the downside over here. But again, am I willing to sit in all of this? Definitely not. So yeah, not an ideal market for me, really. What is your position on dollar CAD? Dollar CAD position is here. We're just going for not even a 1 to 2. It's just a 1 to 1.7. So it's nothing crazy on this one. Dollar Swiss. Yeah, so dollar Swiss has definitely picked up. Let's see. I've kind of missed the move on dollar Swiss, actually. So it's too late to get into buys. We're very well, I want to say very extended. I use that word loosely. We're coming into this daily 200 moving average, and we're also coming into this level of resistance here. So buying into this right now is not the best idea. So what I'd really want to do is wait for pullbacks. So let's see. You'd either wait for a pullback to the downside and try and buy it lower, or you could wait on the daily for a break and a retest. So a break above structure, or break above resistance, break above the 200 daily moving average, the retest, and then enter to the long side. With the current dollar strength, I think that's probably the best idea. It doesn't seem to show any signs of wanting to pull back right now. Euro, pound, and yen are all just dropping like rocks. Pound yen, yeah, we can look at pound yen. Yen pairs have been on a rampage today. Dollar yen, pound yen, Swiss yen, they've all been running. So unfortunately, I'm not in this position. I think I spoke about it yesterday or some point this week, but yeah, I missed the entry, sadly. But I think that that's weird. Mic was unplugged. Did you guys hear that? Can you guys hear me? It's weird. I'm not sure what was going on there. Yes. Okay, cool. Yeah, that's weird. I just got a message saying my mic was unplugged and it wasn't connecting. Okay, cool. So yeah, anyway, dollar yen, pound yen, all the yen pairs I expect to be on full recovery mode. So if we look at the yen, it's just tanking. And I keep saying this, but I do expect this to completely correct the whole move of when the carry trade unwind started. So if we look at what's going on in the yen, there is nothing. There is nothing supportive whatsoever. Yes, we went for a period of changing leadership, which sounded quite hawkish. They also Bank of Japan sounded quite hawkish. But generally speaking, now, they've come out and said they're not cutting rates. They're not in an environment or a landscape to cut rates. To hike rates. So yeah, there's no saving grace for the yen at the moment. So I think all the other currencies are just taking over. So yeah, it wouldn't surprise me if we do see pound yen, dollar yen, all the other yen pairs completely correct back up to where it originally was. James, why selling course? I don't sell a course. I sell signals and education, like a mini mentorship thing. And the reason I do that is because what I provide is top tier. I'm not going to do that for free, and I'm good at it. So why would I not capitalize on it? Yeah, it's muted. I don't know why. My mic just unplugged. I seem to have these little technical problems now and again, but what can you do? Would you enter a sell position on pound yen? Definitely not. It's, look at the volume in this bullish daily candle. Definitely don't want to be selling into that. I can understand why. If you're sort of a counter trend trader, or you trade these sorts of, these what do you want to call them, like a correction type of move. But yeah, to be honest, not in my book. You might be able to get something short term to the downside, but overall the market's definitely bullish. Can you explain how you use pivots? Love from Kenya. Love from the UK. Yeah, of course. So pivots are great. So pivots are, for anyone that doesn't know, they're not just some random lines on the chart. They're not support and resistance, really. What they are is used on trading floors. They were used heavily back on the actual trading floor, and they're not used as often now, but they are still there. So what pivot points are mathematical levels based on the previous daily moves. So if we look at today on this pound dollar trade, why did I enter this? Well, we saw the market open below this gray pivot line. So this is the daily pivot, and these are backed up by stats. And this is why I say that my day trading strategy is a statistical method rather than anything else. So when the market opens below the pivot, we have a 65% chance that the market will close below the pivot, and the same if it opens above. So when we saw the moving averages to the downside, the trend is clearly bearish. The dollar is doing extremely well. Overall, this market should be moving to the downside due to the fundamentals. Now, the technicals, again, market open to the downside, moving averages are bearish. We saw rejection at this pivot point, and now we're stuck on S1. So it's essentially using these levels as bouncing points or pivot points for the market. It's the same with euro dollar here. You can see on S1, this is where we just had this rejection where I was looking to get in. Now, unfortunately, I'm not going to take this trade, I don't think, right now, but similar situation here, came up to the 200 moving average, failed to hold above this daily pivot, and then closed out. So it's essentially, if you dumb it down, it's like trading support and resistance, and then mixing in the trend. So I made a video on my channel if you want to see a full breakdown, but I think it's a bit boring for most people. Missed EU. Yeah, I did miss EU. It's fine. It's no problem. I'm already in pound dollar, so we can see that goes. Can you check Euro Australian dollar for shorts? Yeah, so I was in Euro Australian a couple of days ago to the short side. The problem was it was just ranging, so I closed out at entry. There was nothing there really for me to do, and it's disappeared off the edge finder. Has it? Yes. So Euro Australian was on here as a bearish reading, then it went, and it was a ranging market, so it just wasn't ideal. However, I do still think that this market is bearish. So the reason for that, if we look at the commodities market overall, although we've had a bearish day or a down day, we've got gold dropping, silver dropping, we've got copper dropping as well. The commodities overall are still performing pretty well. We've also had better labor data for the Australian dollar, whereas the euro is kind of in the bin. There's not really anything to support the euro at the minute. We've got weak data, we've got aggressive rate cuts coming. So yeah, overall, I think this market does definitely have room to go down. It's just, personally for me, it's not technically not there. Thoughts on a buy position on NAS 100 after it breaks resistance? Let's see. NAS 100. 25, yeah, so it's basically the same level I've got drawn here. I think that's a good idea. So essentially the problem that we've got with the indices at the moment is they're very overbought. Well, I'm going to use, obviously using the word overbought loosely, they're very expensive, but there is no real reason for them to be slowing down in terms of the momentum to the upside. However, at the moment they are just sort of ranging. There's nothing really going on. So yeah, I guess the only way to really approach this is buying when we have the break, or waiting until we have some sort of pullback to the downside and then buying the dip. But yeah, it's difficult at the moment to try and get into these markets. I was tempted to buy the DAX this morning because I've been talking about this for a while. It's been all over my Twitter that the DAX is following this uptrend almost perfectly, and now we're seeing rejection off this level. The problem is, do I really want to be buying the DAX at such an expensive price? And there's two sorts of answers to that. Realistically, no. But who am I to pick and choose? I'm not in a position to say that I can't buy this because it's too expensive. I've got to take what the market gives me. And if we look on the edge finder, the DAX is still one of the highest readings. It's fourth with a reading of 7. So it's still, fundamentally a nice buy. Retail is short, of course. The only negative thing here really is retail sales. Someone asked me, actually, I think this is a good point. Someone asked, why is the DAX doing so well when the euro is doing so poorly? I think this gets a lot of people confused when they see certain things happening with currencies and it's not reflected the same on the indices. So, for example, I saw another message in the chat today of why is, if the dollar's up, why are the indices not down? And the answer to that, it simply is because indices aren't currencies. They're not affected in exactly the same way. So, for example, if you look at NASDAQ and NVIDIA was carrying NASDAQ, and I think it still is. So it doesn't really matter too much what's going on with the dollar because it's backed up by other factors. So just make sure that you're not associating everything as a currency and you're looking at these assets as different assets. Do you use different EMAs on different timeframes? Yes, I do. So I use the 200 EMA on higher timeframes. So the daily and the weekly, and then on the H4 and the H1, I use the 200 and the 50. I'm waiting on gold between 27.20 and 27.25. Let's see. Uh, 27, what was it? 27.20. Yeah, okay, I see. I understand that. It seems like a good place to buy, actually. We could even get the 200 moving average here to come and sort of help meet price here. So we could get something along these lines. So yeah, I understand that buy. James, can you tell me how you mastered your psychology in trading? I'm new to trading. Yes, that's actually a very simple answer. I think psychology is overrated. It's very, very simple. So the thing is, when you're trading, what you've got to understand is that you place a trade for a reason. So the reason I'm not worried about this trade is because I know the fundamentals. I know what's driving this market. The trade is risk-free. So what's the worst that's going to happen? I'll get stopped out for nothing. So it's almost like I didn't trick the trade. So it's no problem. When you have a strategy that you know works, that you've been trading with for years, or you've back tested and you know it works, why does one trade matter? So if you are on, if you're down 5% for the month, sure, it might look bad, it might feel bad, but over the course of 2 years, does that 5% really matter? Well, probably not, because you can make it back next month. Yeah, psychology, people make such a big deal out of it, and all you need to do is have a winning strategy and those psychological problems disappear. The only other thing, I guess, is a risk management. Don't over risk and you'll be fine. That's another thing that really sort of tipped me over the edge when I started, was I was risking way too much. So I was thinking about how much I can make off this trade. So if I risk 10%, I can make 30% on this trade. That's crazy. But then when it doesn't work and you lose 10%, it feels horrible because you didn't account for the loss. You were just thinking about how much you can win. So you need to always look at a trade as a losing trade rather than a winning trade. So when you place a trade, it's not, oh, I can make this much. It's, oh, wait, I'm going to lose this much. Can I afford to do that? Or am I willing to do that? What do you think about short-term bearish trades on gold on low time frames? That's a good question. It depends on your strategy. So I know already that, technically you've just broken a previous low. So now you could, depending on the way you trade, you could say, oh, I'm going to short on the break of this support. It's not the way I trade, but I know people do make money doing that sort of thing, waiting for these small time frame, low time frame breakouts. So yeah, personally, I wouldn't look to short this at all. But yeah, I'm not saying shorting it is really a bad idea if you are looking for a short-term trade. If you're trying to swing trade the short position, I'd say you're in trouble. Bad idea to short dollar CAD now. Baniel, tell me why you want to short dollar CAD. Is it because it's at resistance, or is there a real reason you want to go short? Yeah, no problem. Thoughts on Nikkei? Yeah, we'll take a look. It's funny, I've got Nikkei on my watch list, but it's just I never trade. I took one short position this year that was stopped out, and since then I've just not touched it. I very rarely go on this chart. I think it's actually got quite a high reading here. Let's have a look. By the way, guys, just a quick plug: if you want the Edge Finder as a discount, use code ELITE. I can give you that plug. So we have got what's the reading here? It's actually the most with a score of 10. Trend and GDP are negative, but overall seasonality is really good. Actually, 1.38% is very strong. Retail's long as well. That's not a huge problem. COT data is long, or COT filing is long. So yeah, I think long positions are definitely the call. It's just not quite ready yet, I think. So actually saying that, what we've got is possibly quite a nice entry here. We've got this level. So we've got support and we've got a 200 moving average here. So having said that, let's see if we've got, oh, it's like magic. It just works. We've got a really nice level through here on this 50% or this Fibonacci level, this Fibonacci zone. So yeah, if you're looking to buy, I'd be monitoring how price reacts within this level. So between 37,699 and 37,009, that would be sort of the buying zone. So possibly look for a rejection within here, and that might then allow you to go in and buy. So let's see. Yeah, so I'd be looking really to trade it back up to this previous high. Stop loss. Yeah, stop loss is a little bit tricky. You could go really aggressive and just put it right below here. Or if you're more conservative, you'd need to have quite a large stop loss, then reducing the R&R here to a 1.27. I mean, 1.27 is still good, but obviously it depends on your capital, really. This stop loss on an index can be quite heavy or quite demanding. S&P 500. Yeah, I've been waiting for the S&P entry. So you can see on the H4 here, we've got this really nice uptrend, trend line carrying price quite nicely. We do have previous structure within this fib level, and this does meet this trend line quite nicely as well, and the 200 moving average here. So I'm just waiting for this pullback into the level, and then I'll be buying. But at the moment, you know, nothing to do here. It's clearly pulling back on daily time frame, so I asked if I could short even though it's an uptrend because I know where it's going to pull back. So instead of waiting, I could try and make some money. If you know for a fact where it's going to pull back, take a mortgage out on your house and put that on the trade. You'll be very rich. I'm joking. Never do that. Never take loans to trade. But yeah, if you think you can make money doing it, then go for it. Who am I to tell you what does and doesn't work? Pound New Zealand. I was looking at Pound New Zealand this morning. I noticed it's also changed here on the Edge Finder to, hold on, let me filter it. Here, it's now bullish. I didn't see this earlier. Maybe I missed it, but it does have quite a nice reading. And I noticed this morning that at some point on one of these streams, I must have been asked to take a look. Because fib was here, I think. Can't remember. Actually, anyway, whatever. Who cares? So yeah, we've got a nice reading here on Pound New Zealand. We've got bullish seasonality, GDP and manufacturing PMI. Interest rates are bearish. However, the overall reading here is quite positive. COT data doesn't really tell too much. Higher unemployment in New Zealand, employment change. Yeah, so pound data does seem more compelling than New Zealand data. So I guess it's more a case of waiting here. Unfortunately, it's similar to the pound Swiss in terms of it's sort of ranging. So really, I'd want to wait for a pullback, maybe back down into the support if we can get that, and then I'd buy. Or, as always, you could wait for the break, the retest, and then the continuation. Ask you because you're much more experienced, but yeah, we'll do it. Yeah, I think, again, it's completely up to you. If you've done it before, you know it works over the long term, then go for it. It's just not my style of trading. 20 bucks on US dollar CAD today, but I thought some crazy move, but it's just 26%. What? 26%? I'm not sure what you mean. But yeah, dollar CAD moving quite nicely. The thing is, there'll be a lot of people going short. And to be honest, I was looking to go short here. But the difference is I was looking to go short due to something happening. I was waiting for some sort of data-driven event to happen, which is called an event trade or event trading when you are waiting and use that as a trigger. And obviously that's not happened. And well, the traders, the elite traders sent this to the long side. So yeah, so far so good. Oil also looks fine so far. Pound dollar still moving to the downside, which is nice. I shall show you this one on MetaTrader, seeing as, you know, it's hard, you know, don't know who you can trust if it's going to load here. So you can see, oh, it's frozen. That's annoying. Yeah, it's the problem. MetaTrader on Mac is awful. If anyone's got a Mac and trades on MetaTrader, you'll know the problem. Gold's almost reaching our zone, James. Is it? Let's see. Oh, it is. Yeah, you're right. Yeah, it's oversold on the H1 as well, according to the RSI. The problem is the daily just looks really strong. This daily candle, I'm not sure really I want to buy into this just yet. Although the hourly looks quite convincing, we do still have this really strong level through here. Sort of this zone here that's not really been tested yet. So yeah, I'm just very cautious on gold. Oh, yeah, okay, basis point, yeah, sorry, I thought you meant 26% move. How old are you? How long have you been trading? I am 26. Oh, God. 26, I've been trading for around 7 years, give or take. I love US dollar CAD trade. Try using cumulative volume delta, yeah. I stole Nick. I did steal Nick. Nick's in my basement. I decided to take over the A1 trading channel and show and company. So yeah, Nick and the A1 team are locked away. No, obviously I'm joking. Before anyone calls the FBI, please someone send me. Oh God, spam. Using iPad version of MT on Mac, it worked for me. Oh, that's a good idea. Yeah, okay, you just helped me out there. Actually, I will do that. Hey James, how long did it take you to become profitable? How can someone remain motivated against stats even though you feel like you're making progress in your first years? Took me roughly 2.5 years to get from losing to profitable. Obviously, there's a break-even period in there. Remain motivated. I think motivation is a bit of a scam. You don't need to stay motivated if you are disciplined and you like what you're doing. So, for example, I'm not motivated to get up in the morning and get on the charts. I do it because I enjoy it, and I love making money. I love, even if I'm losing money, I still love trading. So, as long as you enjoy what you're doing and you can feel some progress, whether you're getting out of a losing stage or you're starting to make some money, whatever it is, hold on to that and just keep going. Reasons for short: USD CAD near weekly resistance, neutral edge finder, many bullish days in the last few months. I'll be honest, Baniel, I see what you're saying and I understand, but I'm going to be very blunt with you and say that that's not enough to go on a trade. In my opinion, again, it depends how you trade and if you've collected the stats and the data. But yeah, for me, it's just because it's had some bullish days and it's at a resistance. You could say the same for gold. This whole time you could say, oh, it's been bullish for too long, let's sell this resistance, and you've been liquidated. You could say the same here. So yeah, just trying to go off that type of method generally, in my experience, isn't strong enough. I thought you were 17. You know what? I'm 26 and I shaved my beard and I went to the shop the other day to buy a Red Bull and I got ID'd and I was like, you know what? There was a period in my life where that was a bit insulting, but now I'm starting to feel a bit proud of that, which actually kind of makes me sad. I'm getting old. I was unprofitable for 5 years, and after hard work this year, I managed to make 70,000 for a prop firm. That's amazing news, Alex. Well done. Euro Swiss, yeah, I suppose we should probably get back to the charts. This is a trading show at the end of the day. Euro Swiss, I would assume it's going down. Where's Euro Swiss? Here we go. Yeah, so Euro Swiss, again, it's just one of those charts. It's like pound Swiss, it's ugly. I think the Swiss has a lot more reason to be stronger than the euro at the moment. So again, I'm like a broken record, but the euro has performed extremely poorly this year. Oh well, the past couple of weeks really, and they are looking to aggressively cut rates. The data out of the eurozone is pretty bad. So yeah, shorting overall I think is a good idea. It's more just where would you get into a short here? For me, the way I trade, there is no way to get in. But if you can find a way, then I don't see a problem. By the way, guys, I hope no one's falling for this Eagle 4000 AI. It's a scam. Automated trading doesn't work, and if it does work, you can sell it to institutions for millions. They spend hundreds of thousands, if not millions, on hiring quantitative analysts and programmers and all sorts of stuff to try and make profitable EAs. And if someone can do it from their bedroom and sells it on Twitter or YouTube comments, then it doesn't work, I guarantee. In 12 minutes, there'll be BOC meeting. I say XXX CAD pairs bullish. Yeah, I agree. We shall see. Oh, sorry, guys. I think I've run over my time a little bit here. Got carried away talking to you lovely people. So, guys, have an amazing day. I'm on tomorrow as well, so I shall see you then. And yeah, don't blow your accounts. I'll see you later. Have a good day.
Oh, Chris Pulver took a trade in our Discord.
Oh, really? Let me see.
Pulver alerts are now available in the A1 Trading Discord. If you want access to everything Chris Pulver is trading, click the link down below or click the link being dropped in the chat now to speak directly with a team member.
Hey everybody, happy Wednesday. How we doing? I'm just getting a trade up for my Pulver alerts. I'm going after a price target $1.50 or higher. My limit credit is set at 185. I've got an image to share. There it is. All right, so I'm hopping in a little trade on the SPY. Had a little win on the SPX this morning. I added a covered call to AT&T. There we go. So I just put that in my index trade section for the Pulver alerts. That's a SPY long put. My bad. That'd be different, right? Yeah, I did it. Long put. I did it right. What am I talking about? Okay, so I have a long put going after 575. So this is why I'm taking that trade. My gamma levels are lighting up to the downside. This is SPY. This started at 610. Now it's at 807. So the order flow is starting to fill up, and I'm looking to see if we make a little trickle down towards those levels. A couple of the reasons I would support this move. I mean, it may not fill, right? Or it may not hit my profit, but we are sitting at the weekly lows, and we are trying to breach those lows. If we breach those lows, have a look at the old chart here. If we breach the weekly lows, then it opens up some movement. Let's say we breach this week's low, which we did today. If there's a little bit more pressure to the downside, let's see what happens. But if we breach this week's low, that brings in last week's low. And if we breach that, it's open space back to a little inefficiency here. I may not see price hit 575, okay? But if we get a directional move today, let's say that we go down to like 579 or 578, it may be enough direction to have my 75-cent debit turn into maybe $1, maybe $1.10, maybe $1.25. I put in the alert there that if it gets over $1.40 or $1.50, I'm willing to take it. I've got my limit credit set at $1.85. So if I do win on the trade, let's say that I get filled for $1.85. So $1.85 minus the 75 cents I paid for it, I make $1.11. So it's 146% return on capital. Not too bad. So that trade is in. We've got some earnings plays today. $22 on AT&T. I actually threw in a covered call at $21.50. My break even's like $21.95. So if we go higher up on AT&T, I am sacrificing a little bit of profit, but I've got a safe $1,600 locked in right now from shares that I've owned on AT&T for a while. And if they get called away, they get called away. So let's have a look at some other. We had Boeing today with earnings. Boeing was a beat in revenue, a miss on earnings per share. Just a little bit, 0.83% miss on EPS, but the revenue was up 0.14. We also had, what else do we have today for earnings? Got to find, where's it at? There it is. So we have AT&T, Coca-Cola, and Tesla aftermarket. IBM. Did I take a trade in IBM? I think I did. Need to change that to green. And I'm going to duplicate. There we go. I want to get this more at the front of my, I've been referencing this every single day. So, all right, let's do a quick spot check. Boeing, AT&T, Coca-Cola. Boeing, I own the shares. Just sitting on those for right now. Coca-Cola, KO. Ooh, had a little dip. My 70 by 71, not looking great. This is out to next Friday. Earnings were decent, but Coca-Cola is dropping. And apparently it wants to drop a little bit more. That's okay. So here's what I'm going to consider on this one. So getting back to $70 might be a tall order right now. This trade was designed to get back above $71. We are risking virtually nothing on this trade, 39 cents per contract for a 61-cent winner. What I might end up doing is we're solid earnings here. Go back to the chart. Coming back into this 200 EMA, what I'm probably going to do is just take the same trade and look at another contract. So if I do 2 contracts, get filled for 35 to 40 cents debit, if we can get one to win and then we can take the loss on this one, I can make 61 cents on 2 contracts and lose 39 cents. So let's do the math on that. If I did 61 cents on 2 contracts, that's $1.22, and we lose 39 cents, I still walk away with $83 profit per contract. So not bad. I like the 200 EMA, and it's coming back in this past resistance. If Coca-Cola gets hit harder, okay, fine. But also another way to play that, rather than doing the debit spread, is maybe setting in a credit spread and then be willing to own some Coca-Cola if it goes lower. So all I need to do is get a credit spread that gives me 39 cents, and then I'm willing to use some buying power to own some shares. Okay. So I may flip this around. Let me see what this is trading for right now. If the IV is actually up a little bit. So Coca-Cola, KO. IV is at 55. Earnings just came out. If I go out to, so for a credit spread, I might look at something, let's say 37 to 58 days out. I don't mind going out 58 days. We've got 250 spreads. Flip this around. If I do a bull put spread, 67.50 by 65, I get 86 cents for a 250 spread. That's garbage. I get $1. This is a little bit better. So I could take this trade out to December, get $1.32 credit. Here's why I would consider this trade. If we lose on this 11-1, if we lose on this 11-1 expiration 70 by 71 bull call spread, which is a debit spread, I'm going to lose 39 cents per contract. So if I were to take this trade, a 70 by 67.50, if this goes lower, I'm still willing to keep the credit and then use my long put to own some shares of Coca-Cola. It's a low beta stock. It's really non-correlated to the S&P. So even if Coca-Cola is going to drop, let's say down to $62, let's say down to $60, I don't know if it's going to drop that much. It might just come back and fill the gap. So I'm going to take a stab at this one right now. It's interesting that the expected move out to December is literally less than $3. That's how low volatility the stock is. So if I get the 67.50 by 65, I'm not happy with 80 cents. Although that 80 cents could make up for the loss, and I'm starting with current price at 67.86, which gives me about a 36-cent head start. This might be the easier trade, but if I'm going to keep the shares, I only want to keep 100 shares and then kind of work my way through the trade. Okay. So let me quickly consider this. Do I like the 81-cent credit? I would basically not take a loss on the trade if I do this. Let me see if I can get filled for 80 cents credit. I like the idea of this one more, but then I'd have to manage the put side. Let's see. How much lower can we go? Fall back into like 66 and then maybe gap fill. Let me see if I can get filled for 83. All right. I like anything over 80 cents looks good to me. Coca-Cola. Yep. So I've got everyone in for those debit spreads. All right. Let me do this. So I'm going to go Coca-Cola. there's my debit spread. Go out to December. I'm going to try to get 82 cents out of this. I'm going to do the 67.50 by 65. If price is falling nicely, I might just close out the long put and then just wait for assignment and then work my cost basis. So I'm going to take this trade for 80 cents, hopefully 81. 82 cents not filling. 81 cents is right below the mid price. Come on, man. 80 cents. Fill to 80 cents. All right, I'm going to put this in everyone's account. 80 cents, here we go. And that will be an easy way to repair the debit spread if we lose on that. If we win on it, great. If we lose on it, no big deal. All right, getting filled for 80 cents on Coca-Cola. I am willing to own the shares to repair this. Even if it's a credit spread that is losing, I'm still going to repair the trade by taking some ownership. And I just want to confirm that I've got all these trades filled. So 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. Good. So those are all in. All right. So I'm putting in that trade there. And I'm going to delete this in my post. I'm going to put this in for the stocks options section in my Pulver alerts in the A1 Trading Discord. Adding in a 12/20 expiration, 67.50. Sell put, $65. Buy put, filled for 80 cents credit. And then willing to own shares. So go over here. We're trading right below that, which is fine. I'll put in another kind of long position like so. And all we need price to do is stay above 67.50. So I'll take a screenshot of this and I'm just going to cut out the other trade for that post. But I'll mention in the post that I am trying to repair. If needed, I'm going to repair that trade. So let me go selection, highlight this, copy, and paste. Ah, fudge, I messed that all up, didn't I? So copy, paste. All right, that just looks worse. I'll just do that. Okay, and then put a line here at current price. There we go. That'll do. Okay, so getting this posted. Stock options, this is KO 12/20 expiration. Let me double check that is exactly right. That is correct. 12/20 expiration. Sell the 67.50 put. Buy the $65 put. 80 cents credit. KO is gapping lower post earnings. The 39-cent debit spread, if it loses, will be a small loss. So I'm using this trade as a way to repair, as well as potentially own shares if price falls further, and then repair for 1 to 2, let's say $1 to $5 per share profit. All right, so I'm posting that in the Discord right meow. There we go. Screenshot there. And off we go. Okay, so KO having some action there. And then we had another one that I wanted to take a look at this morning. AT&T is up to $22. Boeing is up. Coca-Cola. That's it for kind of this morning wrap for earnings. And then Tesla IBM is later today. So Tesla after market, we're trading at 216 with earnings coming after market today. And then IBM, which I'm sitting in, we're trading at 233. I'm looking to see if we have a bear put spread. That is a 115 risk for a 250 max profit, which would give me $1.35. We'll see if we have earnings, hit or miss. Also, just technically speaking, if we just have this thing, retracing to a 21 moving average, then that's enough to see this price drift a little bit lower, gap a little bit lower, which would be fine. Okay. All right. So that's that. Let's have a look at everything top down. Forex wise today, I did see that the currency market, the dollar is super strong again. The yen is super weak. The carry trade is still alive and well. It's been something we've talked about for the last couple of months. It just keeps happening. So, I mean, take a look at your currency pairs. Aussie yen still making some fresh highs. The big ripper has been the dollar yen. These are all the levels that I've talked about. I mean, when we were looking at this low, I know I had a lot of traders that were buying, and I said, look, this is a great spot to be buying with a bear trap and a double bottom. If you were long here, it ripped back, and it's been all the way up to all the levels that I've been watching for, with the exception of this 154. We're not that far away. And realistically, I wouldn't be surprised if this thing comes back into like a deep pullback, and we have this like, multi-month range we're going to deal with where the dollar yen comes all the way up here. Then what happens? Well, I'm not calling the top, but I would imagine if we have a nice confirmation candle, there's a chance to sell this thing and then let this dollar yen be resistance and support. Would I buy it right now? I mean, no. You've missed out on probably what, 500 to 600 pips of movement over this last month or so. So I wouldn't chase this thing, but this was initially what we had talked about. I said, watch the bear trap, watch the trend line break. You can either buy that breakout or you buy the low, and you got a retest of that low. And this thing's been ripping since 142. It's up 1,000 pips off those lows. So anyway, yen is getting weaker. Look at it across the board. Yen is getting weaker. Okay, yen is getting weaker. I don't think we're necessarily taking out the highs, but this is also why I didn't want to short and be crazy aggressive on shorting the yen or shorting currency pairs with like shorting the pound yen, right? I don't think we're gonna have yen strength necessarily unless things are getting really bad in the markets, which they don't appear to be, not yet. Okay, Swiss pairs. Swiss is also on the weaker side. Aussie Swiss is just doing its thing. The Bank of Canada just cut rates, so we'll see what's going to happen. They cut rates by 50 basis points, and I took a look. The dollar CAD. So, a couple things in this dollar CAD, and this will be a forex trade that I will also post if I like it. We've got to be mindful of a potential range break here. So I know there's a lot of resistance. I recognize that resistance can certainly hold, and this could pull back. Okay, but don't be surprised. This range started back in 2022, right? If we go from 2022 to 2024 and this thing breaks out of these highs and we get above 139.50 or 1.40, I hate to say it, but we're not going to 140 and then coming back to 130. We are probably going to 140 and then going to 145. So if this thing is breaking to the north right now, the Fed might cut another 25 and 25, but the Bank of Canada is clearly cutting more aggressively. Canadian economy is not as resilient as the US right now, and it's being reflected in the currency pairs pretty clearly. So I know that it's approaching some resistance. If we have some confirmation to sell, sure, look for confirmation here, but I would definitely have a stop loss above, and wait for a price to do its thing, manipulate those highs. If it rejects off those levels, then you've got a great range trade. But if we break these highs, I think we go to 145. And it's pretty simple. I just measure, okay? I just measure this range right here. So from basically, well, we'll go conservative here. Let's just go from low to high. Let's measure that range right there. Okay? And so if we break out, I just stack that on top, and that would be my symmetry on the dollar CAD. And I'm looking at something around 44.90. That's why I said 4,500. So if we get to 44, 44.50, 4,500, that is a wide open space to be long dollar CAD. Right? Now, does that mean I want to get long right now? No, because if we reject, then there's resistance to trade, and we can sell this high, and that's a great trade. But my point is, this has been in a multi-year range, and I know that this gets traders all excited. to see like, oh, it's going to be a sell. This is going to be a sell trade. Well, if this thing breaks out, we're probably going measured move up to 44, 44.50. So that could be my next kind of open trade on Forex, which is I'll just stack in some orders here and see if we make that run. You know, I mean, if I want to keep this really, really simple, I could put in a buy trade at 4,000 and put a stop loss in around 39 and just stack up orders at 41, 42, 43 and just let this thing go to 44 and 44.50. And if I'm right, price will get there. If I'm wrong, it shouldn't be too noisy. Okay, so I'm going to keep an eye on the dollar CAD, but this is one that is testing resistance. So I want to be mindful of that. My dollar Swiss continues to look pretty good. I'm trying to hold out this one towards 9,200. DXY, again, no signs of stopping. So it's crazy how this dollar's been moving. We've had, you know, such chop, and then it finally moved. It wasn't reflecting on every currency pair. The euro dollar moved nicely, but everything else was garbage. And the dollar now has just been like straight strength, and it's been pretty straightforward, like Aussie dollar straight down, New Zealand dollar straight down, dollar CAD straight up, euro dollar straight down. And I'm not calling the top here. You know, I'd love to see the dollar get weaker, right? If the dollar gets weaker, where? I mean, we could turn at any point, but if we end up coming back into this resistance, or we end up finding some of these highs and running some of these highs, then 106 to 107, okay, fine. We get there and we reject, or we get there and then we reject. I'd be looking for, you know, topping formations and resistance levels to hold. That's my logical spot. Until then, I would go down to a smaller time frame. You know, you can take this to a 1 hour chart. Is there any reason to sell this dollar index right now? Not at all. This thing has been super well supported off those bear traps we talked about for weeks and weeks and weeks. And then when it finally started to show, you know, it's breaking all the structure, getting out here, this thing has been nonstop. So it's been a steady like October run on the dollar, and crazy, right? What's going on with the pound? It's been selling like crazy. Has it been? I mean, I see it up here at the top. I mean, what's pound what? Are you talking about pound dollar? Because that's selling, because the dollar's been stronger, right? But I'm sure not every currency pair is just all pound weakness. I did have a chart alarm go off on euro pound, but that was pound strength, right? Euro is weaker than the pound. Pound is sitting here at 83.20, which, by the way, isn't a bad spot to be looking for support. So I don't mind this trade here. In fact, I'm going to take this trade. All right, I'm going to go, what's the interest rate situation here? CB rates. UK is at 5%. Eurozone is cut into the threes. We're at 3.25. Well, I kind of like that trade less for negative carry. Technically speaking, though, this goes back to 2019. This goes back to, you know, 2016. I suppose my stop loss would be around 82. So what I'm thinking is this: if I did a buy at 83.20, a buy at 82, let's say 82.15, and then a stop loss around 81.75. So if I can get any type of reaction here or here, I'm just looking to see if price will bounce and hold like it has been for the last 4 or 5 years. You know, there's a lot of support in here. If price holds and holds, I think that's a pretty good trade. So let me figure out how I want to price that out for a buy trade on my trade alerts. But it's probably going to be like a 2-entry, you know, maybe a 2-entry position trade for euro pound. DXY spot 104. Yeah, I've got 104.50 actually. You're talking about futures 103.80 for December. Yeah, okay. We'll see if it gets there. Oil 70.82. Let me get rid of some of my moving averages. I'll pull these up later. So 70.85 right now. Crude oil is still hanging out, just bouncing off these lows. I don't like support. I think this is another floor that could potentially break. Natural gas, I want to see if this will come a little bit lower, and I'm looking out to April, May for some futures contracts. Gold at 27.17. Dollars up, so it makes sense that the gold is pulling back. This is totally fine. Okay, another one that I'm waiting to see, can we pull back to something, right? Look, even this little pullback here, this shows how strong this trend is. You know, testing the 21, testing the 21 and the 50, testing the 21 and the 50, testing the 21, testing the 21. That is a sign of a very healthy trend. With today's candle, if we do the same thing and test the 21 or test the 50, I'm probably looking at, another opportunity to get long on gold. I didn't get anything in here. I was hoping we'd come back to at least the 50 period. We didn't. We hit the 21 and then ripped higher. So kind of the same thing. I'll watch for the 21. I'll watch for the 50. Probably put in another credit spread on GC, another credit spread on GLD, maybe even dollar cost average into GLD a little bit because I have some shares of that, and then there's no time factor I have to worry about. But same thing, the 21, the 50, I'll be watching those levels closely. Silver also pulling back. Silver futures also pulling back, which is fine. Pulling back is fine. Gap filling is fine. I'll see what happens. Bitcoin at 66 also pulling back. So IBIT rejecting off the highs a little bit. Bitcoin is still, not able to break these highs yet. I was looking at an email that seemed pretty interesting. This is from Toggle. This is like kind of an AI dashboard. Let's see here. Kamala's odds have reached record lows. This gives us a cool trade idea. Bet on Kamala winning 2.6 times payout by a 1 week 1-to-1 call spread. Oh, that's for like the is anybody like that people are like betting on election stuff now? It's pretty crazy. The source is Betfair. Betting on Kamala for a 2.6 times gain seems like a convenient, cheap way to buy protection. Anyway, I mean, it's crazy. You can pretty much bet, invest, gamble on whatever you want nowadays. But of course, if you have a gambling problem, contact your local Gamblers Anonymous. If Kamala becomes president, historical response from the S&P following a Democrat becoming U.S. president. 1 week, 2 weeks, 1 month, 3 months, 6 months. I mean, the average move 3 to 6 months after is 6 to 11%. Earnings beat amid global slowdown. That's what we got with Coca-Cola for the gap lower. Coca-Cola reported stronger than expected quarterly earnings and revenue driven by higher prices despite sluggish demand. Company posted adjusted earnings surpassing the 74 cents. While unit case volume dropped 1%, particularly in international markets like China and Turkey, Coca-Cola's organic revenue rose 9%, reflecting its resilience. Company raised prices by 10%, partly due to inflation in key markets such as Argentina. Despite these challenges, Coca-Cola remains optimistic, projecting 10% organic revenue growth for 2024. Well, I just like the trade that I got in for Coca-Cola then. How's that? All right. So Bitcoin, that's where we're at. Still watching that resistance level. James, that's interesting. James says Trump 26 to 1. Is that you're talking like 2016? Is that back in the day? I mean, the polls I'm seeing now, I'm seeing him like edging higher, like 54 to 56% probability of winning now. The one thing that was a little nerve-wracking this week was reading that there's a potential 41% chance of a Republican sweep, which would be Congress, so like Senate, House, and President are all Republican. That would be, I think that'd be the most disruptive thing to the markets. I don't know if it's good or bad. I really don't. I think either way, both administrations are going to spend money, so there's going to be fiscal spending. But if we go hard on tariffs, that's inflationary. Obviously, we put more friction in the global economy. That's inflationary. Obviously, that does make the Fed's job a lot harder. And I don't know. The Fed ultimately could break something where if inflation gets higher, hotter, sticky above 3%, 3.5% again, then we might just keep pausing. But I also wonder if we cut November, cut December, cut January, and then inflation starts getting a little bit higher in 2025, that the Fed is at least pausing, but also like, fudge, man, we might have to raise rates again. And it's just the seesaw of what their policy is. Like they're raising rates like crazy. They're cutting rates now aggressively. Everyone's now faulting the Fed for cutting too much in September. They can't win. That's pretty much the answer. They can't win. MicroStrategy at 221. We have earnings on MicroStrategy coming up next week, I believe. I do want to take a look at some earnings on MicroStrategy. I'd love to see a gap lower in any way, shape, or form. Otherwise, all these income trades are looking good. I'll see how it's priced out. I think it's pretty cheap. I looked at this yesterday. It's pretty cheap just to buy, buy a bull call spread. It's pretty cheap, but I don't know if that's the trade. So, because I think I priced this out yesterday during my 3 p.m. session. I looked at a bull call spread that was like $1.50 or $1.70 to make $3.30, which is pretty good reward to risk. But on the put side, you'd have to go like $30 to $40 out of the money in order to get the same price. So the put side was just way more expensive. Anyway, crazy stuff. Copper, no trade right now. Japanese, oh my gosh, man, the Japanese yen futures just getting beat like crazy. This is nuts. You got to wonder what happens here. You know, with this Japanese yen futures, if we go low and high, I mean, are we going to have any type of balance in this market, or is this just like, oh, congratulations, you deleverage and then you're back up to get levered back up and the carry trade is on until we retest this low? I have no idea. But talk about this. This is also the proof that I hate the Japanese yen. It's like, I know traders have been long the yen and, you know, getting some profit out of it. That's great. I just hate the yen so much. So I'll just stop talking about it. The Nikkei hasn't done much. FXY, I'm long FXY, and that's, you know, that was great while it lasted, but I'm actually hedged on this through 2026. DAX is Germany's market. We're sitting near all-time highs. FTSE's UK still the perfect strangle. I want to trade this one so bad. HSI is down 0.28%. EWZ is Brazil. Apple sitting near all-time highs with earnings. We have Mag 7 earnings next week. Okay, earnings is the 31st on Apple. Earnings is the 31st on Amazon. Earnings the 29th on Google. Okay, earnings on Meta also next week. So Mag 7, this is a wild couple of weeks. I mean, think about this. You've got Mag 7 with how many trillions of dollars in market cap? You're going to have somewhere between like $5 and $6 trillion worth of market cap, maybe more, with just Mag 7 earnings next week. Microsoft earnings next week. Netflix already had earnings. They popped up higher. We had some money on that bull call spread. Nvidia doesn't have earnings until November. Tesla has earnings today after market. We've got the bond market down. Yields are up again. The 10-year is just continuing to rip to the upside. This stupid piece of crap. Yields are disinverting further, and the mortgage rate continues to hold from that 608 bottom to 6.44. I'm very curious to see what this looks like coming into Q1 of next year. IWM versus Russell, or I'm sorry, IWM is Russell versus the NASDAQ. Watching this one closely. Got some currency futures, have some regular futures. This is something I'm watching. This is JNK. This is Bloomberg high yield bonds. So your AAA versus BBB versus CCC. If this heads lower, this is kind of it's tends to be a bit of a leading indicator for me. If this is heading lower, then we tend to see some pressure in the market to drop. So I don't like where this is going right now. We obviously could have a lot of points of stability here, but if we have like a big ugly drop, you know, we might see some selling in the market. So I'm going to hold by just the short-term income plays. I got some calendar spreads. I got some broke-wing butterflies. I got some hedges. My ES and my MES trades are hedged out through the election. And then our China plays this week. BABA is down 2%. Baidu's down another 2%. FXI flat. KWeb hanging in there, but down less than 1%. JD's okay, but I've got this one. I'm trying to repair this one out to next Friday for $42. That's the covered call. I don't mind like rolling this again. I mean, I've got 500 shares. If I can roll it, I might end up making, you know, $700, $800, $900. I'd love to make over $1,000 an account for this one and just have it be a nice income trade, but it's going to take some work because price, if it's going to be falling, I got to be trailing and trapping my covered calls and getting closer to price. So right now I'm at 42 with a stock price at 40.24. If it goes lower, then I'll move my strike prices lower. I'll get some credits out of it, and I'll just keep working the cost basis down. So anyway, that is that. What other charts you want to take a look at today? Any other requests? I just did like rapid fire on currencies and stocks. We've got some more earnings. I think everyone's watching to see what Tesla's going to do today. I'm looking to see what the SPY does. We're sitting here revisiting, you know, the daily low. If we get a little bit more directional, we break today's low. That's a fresh breach of the weekly lows. And let's see if we actually gun for last week's low. I will say this on the trade that I took today on the SPY with a 575. If directionally today we were actually down towards last week's lows, that would put me around 579 to 578 and change. That is enough of a movement today to get like a $3 or $4 move. I might just take profit on the trade, right? Rather, I mean, I could go to break even on it. But if we get a directional move and I can turn a 75-cent trade into, let's say, $1.25 or $1.40, or better, I'm probably going to take the profit and just move on. Okay. All right. And let me open up my platform again. HWM, Aussie CAD, sure. Yep. NQ. What'd you do today, Daniel? What'd you do today on your NQ? You crush your NQ today? Or is it just like a bounce off the lows? I just saw the support level. Or were you trading early? You usually don't trade till like 9:30, right? So what was your trade today? Anything? I mean, I know you're trading like 1 minute charts, 1 second charts. What do you trade? I know you're crazy active. We're about, look, I have this low from yesterday on NQ. And yeah, I mean, the support seems to be holding for right now. Here's the floor on the ES. I mean, all these levels. So support, here's support. I mean, if we breach those lows, and it might not happen during trading hours. It might be like post market. We might break and breach and go lower. I don't know, but we'll find out. All right, let me grab a few more requests. Log in. Give me 1 second here. Okay. Dynamic. There we go. Okay, nice, man. 579 bucks. Killing it as usual. Aussie CAD. Yep, let's take a look at Aussie CAD. So Aussie CAD. I'm currently just holding long on Aussie CAD. Daily charts really well supported on these 200 EMA dips. So if we have, back below, back above, back below, back above, testing it again, back below, back above, I'm trying to hold long. My direction is long Aussie CAD until we hit 94.95. 9,400 and 9,500 is my profit zone. So I've been building since this low. I've been building since this trend line break. Added a couple trades over here. So I'm holding for this to get me paid above 9,400. So that's my Aussie CAD. I'm trying to look for this thing to just, pull back in, find some dips, head back higher. If it hits 94, I'll probably take profit. Pulls back again, hits 95. That's fine. Either one. I'm looking for that area for profit. Oh, you started at 832. Okay, gotcha. So did you start early today then? Or are you usually trading at 8:30? I thought you said 9:32 in the Discord. What else? Who mentioned a couple stocks? We have HWM, Aerospace. I mean, this is the same thing as Lockheed Martin or Raytheon to me. I just want to see pullbacks. We have earnings on the 6th of November. So, I mean, these defensive plays and aerospace plays have been just going bananas. I'm not chasing this crap. I mean, I'd like to see a pullback that just, let's find some common dynamic support. We pull back to the 50 or the 100. This is a nice structure area here. A little pullback goes a long ways. Just give me something to participate on a discount. I'm just not buying highs. So a little pullback helps. A little pullback goes a long way. And as they say, a little dabble do you. So I'd like to see a pullback on that one. But yeah, you can look at, how Met compared to its competitors, and you're pretty much looking at all these aerospace defensive stocks. They're all up. Lockheed Martin at all-time highs, Raytheon at all-time highs, right? I mean, look at Lockheed Martin missing revenue. It's down. Frank and I talked about this one on Monday, and it did exactly that. It actually dipped post earnings, but I didn't take the trade. I don't know what it would have been if I did a bear put spread. I don't know if it was cheap enough to take. So I didn't take a trade, but either way, I mean, if you look at what this stock does, I mean, that's a crazy aggressive move from July this year to now. That's a lot of direction without any pullback. So it makes sense we're getting some type of pullback. I would look to see if we, settle in and then close back above a 50 that we can maybe start participating for higher highs again. Otherwise, what goes up aggressively and inefficiently comes back down to rebalance. And then we'll find some support maybe at this like 100 or 200 EMA. Okay. All right. So did Aussie CAD, did HWM, NQ, Aussie Swiss. I looked at Aussie Swiss. I'm still long on Aussie Swiss for some positive swap. My Aussie Swiss target is going to be up at the top of this yellow box. Resistance up here. There's symmetry measured up to 6,000 is fine. 6,000 is an acceptable price target. 60.50 would be my measured move. Yep. Okay, Euro Aussie. You're calling this one. It was a good opportunity to buy at equal lows. Right now, it looks like we have maybe this in the works. We're off of support, we go up, we pull back a little bit. If you get another breakout, we could see the Euro Aussie, range back up in these highs around 6,600. So it seems to be a range that's acceptable. That's a bit of an outlier high, but from 6,000 to 6,600, I could see this being a range trade. Okay. SPY, what does Edgefield tell you about the gap fill? Let me take a look. So SPY gap fill, I'm going to go out for the last 5 years. I like to go out to more data. And today, so gap fill on the SPY. First off, let's check the size of the gap. So here we had a gap of, we opened, so we had a gap of around 0.36%. So 0.36%. We do have a 72% chance by the size of that gap that we could fill it. Now, that's supposed to be filled within the same day. Now, that's a 28% chance it doesn't get filled. And, I don't know. I mean, look at yesterday. So yesterday we had a gap fill. There was your high, your open. So there's your gap, and price spent all day until it finally filled. So today's price action, if we don't breach this low and we bounce here, this market might do the same thing and fill today's gap. And there's your 72% probability. Okay. I'm just looking at this from the structure side of this has been a quiet week of trading with a tight trading range. If we breach this low, I think there's room to go lower. And guess what? If it doesn't get filled today, I'm still thinking this gap gets filled sooner rather than later. So yes, we might have a decline, but this gap is going to be something that the market can absolutely go after later on. So I'm watching the floor today. That's really what I'm paying attention to. Okay, by weekday, let's take a look and see how it fills on weekdays. If we gap down on Wednesday, that's a 67% chance we get filled. But I think by size is what I watch the most. I mean, 0.36 isn't a huge gap compared to like the 1%ers. Those are big gaps that usually don't get filled. Anytime you have a gap over 1%, it's only about a 35% chance it gets filled on a gap down, and a 20% chance it gets filled on a gap up. So that's what's kind of crazy good about big gaps in the market is it's rare they get filled. But in those less than 0.5%, less than 0.4%, they get filled most of the time. So yeah, that's where we're at today. Watching the floor. Let me see. I'm going to move this chart alarm up to here. So 580. I'm just going to put a chart alarm at 580. 580. And Chandler, fellas, do I need to go? Is Nick coming on? If so, I can wrap things up here. Let me know in the chat. Is SPX good for a short? I have some hedges on the SPX. I basically just trade. Okay, no. Okay, cool. The SPX I usually trade daily for a little SPX daily income. And other than that, I use a lot of butterflies, a lot of broken wing butterflies. If I'm going to short just the index, I typically look at the SPY. I can buy puts on the SPY. I'll do hedges on the micro futures, so MES and ES. So this week in the pulver alerts, I put in a broken wing butterfly on ES, and I put in a long put on MES, and those are out for like election hedges just in case things go south. So if they don't, I'm willing to hedge it as things maybe go higher. I offset those costs by my portfolio going higher, but I think it's a necessary evil right now just to make sure that I'm protected, and I'm not really looking at hedging as income plays. I'm looking at hedging as just pure protection. Okay. All right. I'll do a couple more here. I see euro dollar request. Euro dollar. I mean, it's the inverse of the dollar index, right? So, I mean, if I had a great trade on the euro dollar, it would be I'd love to buy this thing at 106 and just buy it and not even worry about it. I think we've got some pretty good range structure in here. So if we come back down to 106, I like this zone a lot, and then pull back into halfway or all the way back up. We'll see what the dollar index does. So yeah, I mean, until this thing turns, I mean, go to the 1 hour chart. There's no sign of bullishness yet. And I mentioned this last week, right? I had mentioned, I think when I did that little top strategy session with Nick, or I hosted for like an hour and 40 minutes. Look, this pocket is a great trade that will eventually get filled. The only issue that I have with it is there's no sign of this price action suggesting that we are going up right now. So as juicy as this profit target looks, as long as we keep going lower and lower and lower and lower, I'm just going to wait. But if we come into this 106 area, that's the spot that I'm looking to see if we can base and then start to work our way up, get above these trend lines on the smaller time frames, and then work our way back up to find that efficiency. So to me, that's a gap. And I think we get there, but if I look at it on the higher time frame, I really like to see the daily, right? Let's try to find a really key level of support. And I had mentioned that maybe this is good enough, right? But that is the equivalent of saying that, oh, the dollar index is going to also form a top right now. Doesn't seem like it wants to. So I don't like calling the bottom right there in the euro dollar without confirmation. So if this goes lower, then I'm going to get rid of that line that I just drew. This goes lower, that's fine. But in this area, way more interested. That would be a 600 pip drop. And if we have support, we keep the stop loss relatively tight and we have a move back into like 109 or 110. But will the dollar give us that confirmation? We'll find out. Okay. All right. W pattern on the NQ. Where at? Is it this? That W pattern? I mean, this is just kind of drifting right now. I do wonder what the oh, you're looking smaller time frame, right? Yeah. I was talking about this on the NQ or the Nasdaq, which would be, we had that high to low. A lot of people said when this crash happened in August, a lot of people were like, "Oh, the top is in. We're not going to find the highs." Well, they were clearly wrong. Like Nasdaq hasn't found the highs yet, but the SPY did multiple times. We have 47 all-time highs for the year. The Dow did as well. Nasdaq, making its way up, making its way up, making its way up. Is it possible that this hits these equal highs and blows that out, or is it hit the equal highs and then range? I don't know. Okay. I don't know. But this is what is all coming in the next couple of months. We're going to find out whether this market is truly in melt up capitulation territory to just more all-time highs, or this market has seen its highs and it's going to be difficult to breach them once again. Right. So we'll watch. I'm watching highs. Dow pulling back off the highs, SPY pulling back off the highs, Russell a little bit more volatile. It's funny how the Russell was outperforming indexes last week, and that was the weakest one. It's very sensitive. Poor little guy. Right. And then Tesla. Yep, we talked about Tesla. There's earnings coming today after market. So I'm curious what Tesla does. Realistically, if Tesla goes higher, then there's probably an easy trade right there out to November for profit. If Tesla goes lower, I'd already said this on the trade. If Tesla goes lower aggressively, I'm going to use my 220 put and I'm going to own some shares and I'm going to repair those things for $5 or $10 a share and make 500 to 1,000 bucks. So if it goes lower, I'm kind of excited for that. I want to own Tesla lower. But if it goes higher and we get a gap fill towards 240 or so, then this trade becomes profitable pretty quickly, and we can take, let's say $1.30 debit and take 50% of the profit. Or if you want to wait on it through November, then you can take your chances to try to get full credit by expiration. But earnings coming out today after market. Okay, that being said, I'll wrap it up here. Look, watch the lows for the week. That's probably the most important thing right now. I've got to trade on to the SPY575 long put. If we break the lows and we breach or we come down to last week's lows, if that happens today, if we're coming down to the last week's low today, meaning we get a more directional push and we break the lows again, I'm probably going to take that 575 put and close it out for profit today. Why? Because if it's happening fast enough directionally, I still have some time premium until Friday that I don't necessarily want to hang on to. Now I could, but if I get 75-cent debit turns it into a $1.10, $1.15, $1.20, I might just take the profit and move on. Okay. All right. So that being said, I think I'm good for the morning, and back at it tomorrow. All right. Thanks, everybody. Have a good rest of the day. Thanks, team. See ya. Bye.
Thank you for watching today's A1 trading show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.